Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your agriculture update, and this is for Tuesday, the 8th of January, 2019, about 2:05 p.m. Central Standard Time. You know, in the grain market, it was an interesting day. The market beat up the wheat in the last 10 minutes of trade. The market had been looking strong as can be, and it settled actually in the bottom part of the day's range. Still up on the day, but still in the lower part. In soybeans, what weighed on the market was the fact that we are hearing that we're in the third day of talks in China. Originally it was going to be 2 days, but it's always been fluid. So the fact that they're making some headway, that's a good sign. However, remember that the USDA is short of funds on the reporting basis, so we're not getting all our crush reports from them and other government data on the grains. But we're hearing in the trade that China may have completed, past tense now, completed the 5 million metric ton purchase of soybeans they had committed themselves to, with a last purchase of maybe 15 to 20 cargoes that the trade is rumored part of this rally, this 50-cent rally that we've seen. So now the question is, what next? You know, the president speaks tonight. Who knows what he's going to say or the impact it'll have on the market. Some people think that one of the things he may do is elect to say it's a national emergency, if you will, and he is going ahead with the wall under that idea, and it's going to be challenged in court if he does that. But it's a win for him. Why? Because then people get their checks this coming Friday, and you don't have, if you will, us, the public, funding the government while this all goes on. Now, I'm not talking that I work for the government, but those that do, and we all know that we pay those bills, so that's one of the ways to look at it. When I take a look at what beans have done, I was disappointed that the market couldn't follow through and get up and over this 916 3/4, which has me concerned that maybe the market's ready to pull back to this 876 1/4 area. But if you can get over that number, then I'm going to turn rosy again on the grain market. So you're at a very important zone, as I call it. You can see how this market's come up from this roughly 880 area, got into the 920s, well, 920s there, and backed off. In fact, yesterday's high at 927 3/4 was the high in the March beans, and now you're getting your first little pullback. But this was one heck of a nice move to the upside. You've also got a pattern of a lower low and a higher high. So this run-up, I bet if I did a Fibonacci count from this point to this point, you're probably in that 2/3, make it a 62% retracement, where the market likely ran out of some momentum to the upside. On the pullback, if we continue it, I would look to see how the 18-day average does, and the resistance level of the upper Bollinger Band was never hit. That's why I'm thinking, just out loud as I'm talking to you, that's probably a Fibonacci count in that general zone. If you want to use our charting software, you mark a line here and here with the program, and you see where these numbers came in. They'll probably fit into that general area. What bothered me yesterday, and bothers me still, is you're overbought as can be in this market. So consolidation at a minimum is something that I think the market is ready to do. In the meal market, if you take a look, yesterday you closed over the upper Bollinger Band the day before. Today you started out over that. You finished the day at 321.60, just under the 321.80 level that is that upper Bollinger Band. So yes, it's still a sign of strength, and yes, we had a bullish crossover. Do you see that the 18-day average in red got over the green, the 100-day average? That tells me that the market internally is getting stronger. Now the question is, if it does decide to pull back, does it get to this number, or does it just decide to move out from here? My instincts are, unlike beans, this market made higher highs. You don't have a Fibonacci count, anything like the soybean market did. This is a stronger market, but again, it is a market that is overbought. In soybean oil, the 100-day average zone, and we talked about this yesterday, proved to be the problem for the market. Not strong enough to get to the upper Bollinger Band like Neil did. You've got a pattern of higher lows, higher highs. I'm going to expect this market to have, if you will, spin its wheels against this 18-day average, or maybe even a little bit lower to see what it's made out of. In the corn market, a disappointing day for the bulls. You got to the highest high of the move, and all of a sudden the market comes down, finishes right against the 18-day average of closes. And as you know, when a market gets under that number, I often look for that to be the number the market fights at. Over it, often it spends a little bit of time fighting at that number also. We'll see what happens here. If it continues lower, look for the 100-day average to offer the next level of support. But you're not in a trend. You have a lower low and a higher high. That is not a trend, and momentum is going flat on you right now. As I said, I think the wheat was disappointing today. Yes, you've got the pattern of higher lows and higher highs, but you need it to stay over 519.25, which is the 18-day average of closes. I'm convinced somebody saw that number at the end of the day and pushed it back. Now, if the market gets under 513.5, what you do is you step out of this leg of the uptrend. You'd end up with a higher high, lower low, battleground, the 18-day average of closes. The good part for the market is the momentum is measured by slow stochastics, didn't turn down, but the market's on what I call now savior. In other words, you're throwing what do you call that when you throw it off the boat? Life preserver. That's it. As we take a look at the higher high, lower low pattern, the market's been running to the upside in terms of momentum. It's not yet overbought. The market extended the gains from yesterday, which were sharp. You've got a pattern here where both the 100 and the 18-day average are about the same level, so that number on a pullback might offer a little support, but again, you're not trending. You ended a downtrend that began way back here with the lower highs, lower lows that eventually carried you down into this area. You negated all that by the big rally you had yesterday when you got through this level, and now the market is sort of saying, okay, shorts, you're out of the market, but do we get fresh buying? Coffee market. Remember I said to you just the past few days, this market's changed its character. It's no longer having the problems that it had at the 18-day average of closes. Plus, it lost this whole downslope and it started going sideways. Now today's a test to see if it can stay over the upper Bollinger Band. The fact that it's overbought has me thinking, nah, probably is going to pull back in this zone. But what is the trend? It's up. What's the bias? It's up. It is oversold. It is over the upper Bollinger Band. If it got a piece of bullish news, maybe the 100-day average becomes the next resistance if you clear this Bollinger Band by more. Otherwise, I wouldn't be surprised to see the 18-day average be a move that it wants to pivot around. Cocoa lost its embedded reading again. So now the market gave up today 28 points, and that was a pretty good bounce off the lows. It got to 23.55. So you've got the pattern of lower highs, lower lows. You've lost the upside momentum. In fact, with the slow stochastic down here, unless it regains itself right away tomorrow, the odds favor that price and the 18-day average will continue to make a run at each other. In the cotton market, you've got the higher high, lower low. But what's the most important thing on this chart? You've kept the embedded reading all the way through. You did not lose it yesterday on that rally, and today it just starts turning down. This market's still looking in the bear camp. In the cattle market, wow. You go from the upper Bollinger Band, and I know we were just talking about this yesterday. It went down into the support of the Bollinger Band, came back, and today, right back to the top band. If you can trade that, God bless you. As you trade with the feeder cattle, you've got a market resistance between the Bollinger Band, but really the 100-day average, and then down to the Bollinger Band. Yesterday was not like it was in the fat cattle, but today what happens is the market rallies up and fights a battle at that 18-day average. It is not a trend. You have a higher high, lower low. Last, in the hog market, a bit of a rally today, and that rally started developing when at first we heard in the morning that the trade delegation from the U.S. and Beijing was wrapped up, and that while the parties had made progress, there were still discrepancies, and all of a sudden there's a third day of meetings. Market looked at that as favorable. Why not soybeans? Because the Chinese had committed for the 5 million metric tons. Now, from the math we're hearing in the trade, they may have accomplished that. So this got a little bit more of a bid. While beans sold off, maybe the Chinese aren't going to do any more beans until further progress is made. I wrote a silver report for everybody today. And this one's got a lot of nice pictures in it too. So I'm giving you the seasonals. I'm giving you in the report how the market starts off the quarter. I went back to 2015 to give you some ideas in there. So you're going to get from it the commentary, very brief, but it's right there. My idea of what should be done in the market, the seasonals. I didn't include a price count on this particular report. It is to the upside. It's still looking good to me as far as I can see. How do you get the report? You might want to give us a call. You can certainly go to our website, sign up for it. We'll get that and then get it out into your hands. Okay? Simply call us. I'm Ira Epstein. You have a good day. Talk to you tomorrow.